Joining us right now for more on Home Depot is Brian Nagel. He is Senior Equity Research Analyst at Oppenheimer. And Brian, this is a little bit of a surprise. What do you think about the guidance?
Well, good morning, Becky. Look, I think you summed it up well. This is very clearly a miss and a guide lower from Home Depot, which, as you said, it's a surprise. There's been a lot of concerns out there in the market. Some are on Wall Street. We're calling for this guide lower, but I'm just digging through this report right now. This is a weak report from Home Depot. And like you said, what we saw is a clear sales miss in the first quarter. Now, a lot of that seemed to be weather and lumber prices, which are probably shorter term in nature. But on the heels of that, management did take down guidance for the year, which again, there's probably some conservatism in there, but nonetheless, they now have a more dampened view of 2023.
Do you think that this is something that will be a similar tale that's repeated by Lowe's, by any of the other big retailers that are reporting this week?
Well, Lowe's definitely. And so Lowe's, if Home Depot's doing, their comps are down 4 to 5% here in Q1, Lowe's is more skewed to that seasonal category. So, what Home Depot's saying in this press release is probably even more of a negative for Lowe's in the very near term. Now, we did hear from Tractor Supply, another company. I don't think I talk about Tractor Supply much in your show, but they reported a few weeks ago, also very weather dependent. They talked about the weather as well, but the other key point they made is that as their quarter, and that was March and then into April, as time progressed, weather improved, sales picked up. We'll see if Home Depot says that on their conference call. But to answer your question, this is clearly a negative for Lowe's and probably others out there that are weather dependent.
There's Lowe's now. We needed to show Lowe's chart, so it's just open. Yeah,
this is going to be what sets the tone today. Again, Home Depot down by about 5%. A lot of times we say, let's wait and hear what they have to say on the conference call. But I think what they said in this release was pretty straightforward, Brian.
Yeah, and that's what I say. It's a clear miss and guide lower. The only, again, I think, look, this is happening against a very concerned backdrop towards the consumer. Okay, so this is, so to say, feeding the beast, if you will. I do think that Home Depot will say something on their conference call that as the weather's gotten more spring-like, you've seen sales pick up. And frankly, against this backdrop right now, and given the numbers reported, I don't think that's going to be a big positive for the stock today.
Brian, what other things do you want to hear from the company? What would make you feel better, or is there anything that could say beyond just the broader macro picture here?
Well, look, it's funny as we're talking about this. Earnings did beat expectations, right? They did 382, 3. So, what that shows is on the bottom line, on the EPS. So let me make that clear. So EPS beat expectations. So, that's once again a testament to Home Depot managing well a softer sales environment. Again, that's not going to be much of a buffer for the stock today, but it's an underlying positive. But as we're listening to this conference call today, again, I made the comment about weather, to the extent that as weather's turned more spring-like, have sales picked up, then also anything they could say with regard to the underlying home improvement customer. Because interestingly, we've actually seen better housing data lately. I put a big report out last week talking about this. And, that's not a coincident indicator for Home Depot. But when you start to see housing solidify, underlying that is a positive for Home Depot. So to the extent that Home Depot talks about that, that could help to cushion the stock a bit.
Revenue was a miss. And from what I'm hearing, that was the biggest revenue miss since November of 2002. So that goes back a long way. Maybe it tells you that the margins are actually holding up okay. And that's been the story we've heard from so many companies, that their margins have been safe. They've been able to raise prices and protect that. But that also builds into that larger inflation story. What would you look for along those lines?
Well, this is, again, another pod. As we think about 2023, and as we work through to 2023, and this is a comment I've been making about across my coverage universe, shipping costs, logistics costs have come down significantly. And we just need to wait now for the accounting to catch up, basically the way these costs are capitalized. So lower shipping costs on the heels of massive supply chain disruptions over the past several quarters later this year will be a positive. Okay, and that's going to be a positive for margin. So we got that kind of coming, so to say.
We got. I think we have a 5-year chart. That's what I just asked for. So we've given back everything. It's a 2-year low, Brian. If you've been recommending the stock since March of 2021, you're back to square one, right back to where it was. Made no money.
So I want to point out, just as mine, and I know I talk about this a lot in your show, but when I thought the pandemic was winding down, I was obviously extraordinarily early in this. This was back in, essentially summer of 2020. We downgraded Home Depot's on the idea that you'd have this post-pandemic, so to say, reset. Now, clearly the pandemic, unfortunately, persisted a lot longer than me and than a lot of people thought. I think that's what we're finally seeing now. Again, with all that's going on, weather, lumber prices, underlying softer consumer potentially, but you're also seeing, and Home Depot's talking about this in the release today, these numbers, this down 4 to 5% in comps in Q1, is still coming on the heels of significant sales gains over the past few years. So I do believe I put out a short article or comment yesterday talking about summer travel, and we're seeing indications that travel is really picking up. That in and of itself is probably a negative for Home Depot as people are traveling, spending more time traveling, spending more money traveling. Maybe they're not spending as much at Home Depot.
But maybe everything's going to eventually unwind from the pandemic, labor market, everything. So maybe this is like an allegory for the whole, shooting match.